Hey traders, welcome back. In today's video, we're diving deep into marking swing and internal structures across multiple timeframes to fine-tune your entries on the lower timeframes. If you've ever struggled with timing your entries or understanding how market structure really flows, this is for you. We're going to break down how to spot major swings on the higher timeframes, then zoom in to identify internal structures that will help you pinpoint those high probability entries on the lower timeframes. Let's jump into the charts and get started. So I'm going to demonstrate this on the US dollar CAD today. We're going to start on the weekly time frame. This will be a short video just to show you exactly how we can look at those swings and internal structures to quickly identify as we go down through the time frames where we can start looking for those setups. So we don't need to go too far back in time. The main thing we need to start looking at is where do we see a major swing? We see a major swing to downside here, where we have a nice break of structure, creating a strong high and a weak low. So quickly looking at this, I can identify that the market potentially has a bearish swing to downside and is making a potential pullback against that swing. Now we can see within this area, which we'll go to in more detail later, but we have these smaller swings within. That's going to be our internal structure here that we can identify in the market, where the market continues to push higher. And we can see where the market has now made this strong low and a weak high, and potentially looking for the market to continue to run higher with that internal structure. So that's the quick and easy way to look at this. Mark this up on this chart. We can mark off this as our potential break of structure. This becomes my area where we have a strong high in the market, and this is my weak low where we're looking for price to pull back against this trading range. We want to see price pulling back to an area of supply inside our area of potential premium. So this is where we do have an area we could mark out. We do have an area here of supply where market has bounced off once, potentially twice, nearly 3 times. And each time we go up, we want to see price going deeper into this tested area of supply, and then we want to look for the shift out. So what we want to see next is that internal structure, okay, pushing up into our area of supply to show us that shift to the downside. So quite quickly, we can identify our last break of structure on the internal side here is this breakout right here in the market. This then gives me a weak swing high and a strong low we can mark here. So from this information, we can then start to mark out areas of potential demand. So let's go closer into this price chart. And we can identify this candle pushes up and leaves a nice pivot area. We retest it on this candle, move away, then we pull back and we break out with this candle. So we have an origin area of demand we can mark here, and we have this breakout area of demand here. Now you can see that the market's come back into that demand where we've seen that push away. So what we have here now, we have our swing structure with our swing pullback on the weekly, and we have our internal structure. So our last break to the upside, we pull back into this area of demand, and now we're looking for price to run through this high. Now what we want to see really is the market to continue to run through this high. Then we start having a new higher low here formed, where we need to see the shift back through to start showing us that reversal of the structure again. So what we now actually do is very simple. We can drop down to a daily time frame and we can use the same principle. We'll just mark all this out at the moment onto this weekly time frame so you can see where we're based on a weekly. And if we now mark off this high again, and we'll mark this off onto the lower time frame, and we'll do the same, this break of structure here, and this being our current strong low. This is our internal structure. If we now drop down to a daily, what this is going to give you is your swing structure on a daily. And again, we can go closer into price here, and we can identify that last area of potential demand where we have a full drop down. We have a smaller area of demand, a pivot zone, and you can mark off this as a range area. And again, the same, we can do a pivot zone of demand here, and we can mark it off as a potential range area here as well. And we can see as where prices come back into that area of potential demand. So this is where we see our swing move. And again, we're looking for price to pull back here into an area of discount, this time into demand. And that's exactly where we saw price pulling back to. And the idea now is to see price continue to run up to this previous high. Now, when we did break out of this area, we can start looking at that internal structure again. We have our swing move on the market. Now we're looking for that internal reversal, and we have a nice internal reversal right here, which is going to leave you a nice area of demand sitting here. Now, if I'm going too quick in anything in this video, please do go back, rewind, and watch the video again, because it's going to help you to keep going over these concepts to see how I look at these markets. But this is a reversal, okay? The internal structure reversal. Out of this area of demand, there's our swing pullback. We reverse out of that internal structure and we see the bullish move away. So at that point, we have this area of demand where we can look for price come back to. Now we do have on the way up, and if I mark this out, we do have this push up, pull back, another break of structure, another break of structure. Then we reverse bearish, internal structure, we push back into this area of demand. So at that time, your internal structure is bearish again until we reverse through this area. We start seeing a bullish move once again. But this area of demand is still valid on your charts because we've bounced out of this previous swing area of demand. It's a reversal out of a swing demand, which creates a new internal demand low. Now this area we can go down to what we call the lower time frame, and we can start looking for that reversal out, understanding the structures in the market again. Just take all this off. If we're at current price, we'll look at current price in a moment, but if we're looking at this area right here, what we need to understand at this point in the market is that this is our last break of structure to downside of our internal structure. That's our strong high. This becomes our potential weak low. So if you're looking to buy here, you are buying counter trend on this internal structure, and on the lower time frame at this point on the 4-hour, it's also going to be a swing structure to the downside. Let me just mark this off quickly. In fact, let me just go to a replay mode here quickly, and I'll show you exactly what I mean on a 4-hour time frame. We're going to go to the 4-hour time frame, and you'll see where we have that break of structure. So you can see we have that break of structure to the downside. This is the start of your swing move to downside. And this is where we have a previous area of potential demand. There was a range area of demand, I believe, here. You can see that range that's forming in the market when we have that push away. So you're looking for the market to show that reversal out. Let's just fast forward this to the downside. Now within this move down, this is where you can start to read internal structures. So we have an internal break to downside, a pullback, looking for the next break to downside again. This is how you start to read those internal structures. We have another break to downside of your internal structure. You continue to do this until we get into the area of demand. So if we're looking for a reversal of structure, we're looking for this high to be run. We continue forward to see if we go lower again. We go lower again. Now we've got this as a break of internal structure, and now we're looking for potentially this high to be run. Continue to go forward, and we're holding at this area of price, and we're looking for price to basically close through this level, and that's exactly what we're now seeing. So this is how you can start going through the use of the multiple time frames, understanding that this is a 4-hour swing. Now at this point, we're bouncing off this area of demand. We're still looking to go with a daily swing, which is bullish. But you have to understand this move here is counter trend based on the internal structure on the daily and the swing structure on the 4-hour. Now the internal structure is now bullish, which means we can look to buy this market. And you'll be looking for any pullbacks to this area of demand, and you can start looking to buy up to the area of premium. Now you can also look to hold this to expect it to break this area of swing structure if you're going with a daily swing move. So let's go forward and see if we actually do come back into this area of demand. So we may not even come back to this demand. We get a strong move away. We push down and we've continued to push higher. So we've not actually come back to this demand. We've actually now come into, okay, I have no idea what this is going to look like on the charts. I just wanted to go through and show you the price and how we look at it. So this is where I want to see an entry out of the demand zone. So we had a pullback here still. It's still a valid area I can look to trade. But now we do have the internal structure. Okay, we have a new internal structure shifting, breaking bullish. This does create, okay, here, a new potential area of demand. not the greatest looking demand. And the other thing we're looking at now, we're buying into premium. So what you really want to be looking for is the market to start shifting through this high of swing, then a swing pullback to continue with the market. Now, price is never going to give you exactly what you're looking for. This is the key thing to understand. When you're reading structures on multiple time frames, it will all tie together. This entry out of this area, we do have a sweep here at the low, continuation to break through the structure, is an early indication for me that potentially this demand is now going to hold, and you'll be looking for price to run up to potential weak highs here on that daily time frame, which we look back here. This is where we're looking at price to want to run towards eventually. So that is understanding the use of those types of structures, okay? Using your multiple timeframes to your advantage. Let's just go forward and see what actually happens if we hold at this area of demand. We move sideways at the moment. Let's see, and we do push up again bullish. So you can see this area of demand has held price, and we can start to then map out your internal structure, okay? This is still your swing move. We wouldn't really want to be buying now because we're inside that premium, but we can also see how price now reacts. Let's keep going forward and see how we react off these areas. Hey traders, we'll get back to the video in just a second, but if you're over 50 and serious about achieving financial freedom before retirement, listen up. One of my students, Danny, had lost nearly 300,000 trading on his own. After joining our 90-day profit trading system, he's made back over a quarter of those losses using the mechanical strategy we teach, and he's just getting started. This program is designed for traders like you, 50 and over, who are ready to finally trade profitably. With limited spaces available, you'll get personalized support and lifetime access to our community. If you're serious, click the link in the description below to secure your spot today. Let's get you on the path to financial freedom. All right, let's get back to the video. So the market has now pushed through that high once again, and this is where you can start to just back test and do this for yourself. And if you're a struggling trader, it's going to help you to understand the flow of the market when you're reading structures like this. So once you start to identify, this is where we have that reversal. Let me just mark this off again. And then you can start looking at your next break. Okay, we have a new area of potential demand as we continue to break up. And you're looking for this to continue to be bullish until it reverses. The idea is if you're going with this swing structure, you want to see a reversal of structure at some point. So now you have a new high. We can look for potential pullback, and we can look at this full range that we've marked here. We can mark this full range and pull back into there for an entry. So we've now pulled back into the full range, and you're looking for an entry out to run that weak high once again. Now, if we reversed through this area, that shows you a shift in internal structure, and you then potentially looking to run this low. Now, in hindsight, we know this never happens, but that is potentially what we're looking for right now, is the market to want to show you that shift, pull back to a new area of supply for us to start looking to run towards these lows again. Let's go forward so you can see exactly how this would work. Looking for a run of this high, for continuation of that move, to see if we do run that high or we break and shift. So you can see the market's coming quite deep now into, we failed to run that high, we come deeper into this area. Now this is basically what we class as a range, and our pivot zone is down here, and that's where we now come into. So you've got two types of zones you can look to use, and there's more of this you can learn in the upcoming opening, okay, of the 90-day profit trading system. Let's see if we can now run higher from here, or we're going to reverse. So we eventually run higher. So you can see how the structure continues to push higher. This will now create a potential area of demand here as a pivot. We could look at this as a range area as well. Let's see if we pull back into that. Now, once we have that breakout of this high, we expect a pullback. Let's see if we continue to push higher again. Now, what we're looking for is, again, the market to want to run through this high out of this area of demand. Now, we're inside this full range. You can still see price pulling back into this area. And it's here when we go down to lower time frames. Let's go continue forward, see if we run that high once more. And then what we'll do, we'll look at the current price. And again, we can see price comes back into that demand. We actually hold of the imbalance and we break that structure again. So continue forward. Let's see if we can do this all the way to reverse structure again. Now we have a new area of demand. Let's continue to push forward. come back into the demand. And once again, what you'll be looking for is for this week high to be run. Continuation of that structure. Let's keep going, see if we reverse or not. And again, if we were to refine this as the last pivot, that is my zone, which we now just took out the low, previous test, gone deeper. Now you're looking for this high to be run. This shows me an expansion out, a higher low, potential run for this high. Let's see if we continue to go up. Okay, sideways movement, and we run through the high once again. Just about, I think we just swept it. So we still need to see a closed through for a valid break. Another sweep. See if we can push through, and looks like we're now actually pushed through that high. So now we're looking for a continuation. Again, this becomes your new area of potential demand. Potential pullback again we could have into demand, then looking for continuation to run the week high. Now, because we're coming so close now to this swing high, very often what you can identify is that reversal out of this area of supply. And again, look, we'd have an area of a range zone of supply you'd mark here, where price is now coming into. Now, if this shifts bearish, in reality, this is going to show me that the market may now start to run for this week low. And that's how you'll be looking at price. Let's see if we hold or we shift. So we did shift. Let's go closer into this price. Now we have just shifted through this low. Now what that tells me now is potentially we now have a weak high, strong high and a weak low we could run into. And you'll be looking for how price reacts when we pull back into this area of potential supply. And again, we could use the full range that we've seen formed. This has been removed. But at the moment, we've just pushed through into this demand. That's where we're seeing that bounce coming from. Let's see if we pull back into that supply and create a pullback again. If we pull back into that supply, we've actually pulled back and just swept above into this area of imbalance. Okay, we want to see really into the area of supply. Let's see, we pushed up into that supply now. Will it hold? Okay, and will we see price running for this low? No, it didn't. And this is where you're going to find you having a losing trade. Okay, it's great it's come to this, because at the end of the day, you need to understand that whatever you are using in the market, you will lose as part of doing business. A good trader will understand this ahead of time, that every trade could potentially lose. So if you're struggling in your 50s and you are having losing trades, it is part of doing business, but it's about having that edge in your favor. So now we've broken through that structure high. Well, that means now we have a new era of demand once again, and you're looking for a continuation now to pull back to demand, to run the week high created here, but to also run this swing high to reverse the swing structure. So we forward with this once more and see what happens from here. So we do pull back into that demand. More importantly, we actually push through that low, the tested zone, into it. So this is where you could actually understand a fresh and tested zone. That's your entry out of the era of a tested zone, and now you're looking for price to run through the highs above. So let's see if we can do that now. Can we push through both that internal and swing structure? At the moment, we've just made a sweep and we're pushing back down. This is where you're going to find price can become very choppy when we're looking for that full reversal. And eventually we get it. Okay, so now you can see the market's now pushed through, and all it's done is come back into this area, which we have an area here of imbalance, held at that imbalance, and now we're pushed through. So that is understanding, reading the structures from a swing and internal structure. Now here, normally you'd be looking for that shift to go bearish to run for this week low, but because you're coming out of this area of demand, which obviously was coming out of the daily demand, what we saw on a daily time frame, go back to that daily time frame. We're bouncing out of this area of demand. We are looking for price to run for this high. So you need to have that in the back of your mind. The higher the time frame, the more weight it's going to have. Now, if we just now go back to normal price here, and we just finish this off by understanding, reading the structures. Now we've got this internal structure. We've got this push to downside, a break of structure to downside. Okay, and we'll use these levels over here, and we've just broken back to the upside. So now let me just remove all of that. We can identify on this time frame, okay, we've now shifted back bullish. We're going to create an area of potential demand where we can look for the internal structure, okay, where we did continue to shift bearish here, pull back bearish. Now we've gone bullish, and we're looking for this to stay bullish again, to look for the market to pull back to areas of demand until we run through that weak high we see on this swing pullback, because we already made that swing pullback into the area of discount, into demand, and we saw the shift out. We've come back to that demand. We've shifted out again. Now potentially we're seeing another shift on structure. How does this look when we go to the lower time frame? When we go back to that 4-hour time frame, this becomes now, okay, a previous break of structure to the downside. Now we've broken to the upside. What it now creates is a new strong low in the market. Okay, this is a previous break. We don't need it. Up here, we will have an area of supply where the market can run towards. And down here, we're going to have that area of demand. Now we have a pivot area of demand down here, and we'll be able to look at a range zone of demand, which will potentially be that pivot zone on a daily. But we could see the market come all the way back down to retest into these areas. So as we have at the moment, we're bullish, but you're looking for, as we've broken through, you're looking for a swing pullback to continue with that bullish bias till we get to the areas of supply. Now, within this movement, we can also identify, okay, we had a break of internal structure to downside. Remember, this is now our swing structure. Then we had a break bullish to the upside. So that's where we see the shift of the internal structure as well. Okay, we've gone bullish on internal structure. Now we're bullish on swing structure. We continue to look to buy those dips going up for the areas of supply above, but eventually looking for that daily high to be run. Now the same can be said here. When we see this forming, this break here to downside and now a break to the upside, if we was to drop down to, let's say, 30 minutes, you're going to see this becomes your swing structure on a 30-minute. So there's your swing drop, there's your pullback. As we break structure here, we're expecting a pullback at some point, but then you can start reading the internal structure. We break internal structure, we continue to be bullish, and this is how you continue to mark out your internal structure. So until you see this internal structure shifting back to the downside, you will not see that swing pullback. So again, that we continue to shift bullish. We have the final push up to break this structure, and now price is sitting above. This is where you could potentially see the market now shifting. So if we was to now drop from here, making a lower high, then we pull back and we start to see that move down on the internal structure. And that's where we're going to see that swing pullback, where we see this drop breakout. Now this is a strong push away, I must admit, but you could start seeing a pullback against this full range. So you could see this previous breakout point as the area price wants to pull back to. And if you mark it out from this low to this high of the move, look what it comes right to, that 50% where we see the start of the discount forming. So that's how you can apply the use of the swing structure, the internal structure, multiple time frames. Again, if you've struggled with any of these concepts in the past, just watch this video over and over and over again. The more times you watch this, the more it's going to help you to understand. And if you want to learn more on market structure, I suggest watching this next video coming up, going through the full playlist of how to trade with market structure in your trading.